Hi, everybody, and welcome back to video number 3 in chapter 3. And when we left off, we're looking at how we would deal with under-applied or over-applied overhead. And in this particular case, you'll remember we had over-applied overhead of $30,000 because the actual overhead was $650,000. And what we applied was $4 per direct labor hour times 170,000 direct labor hours. That was an estimate. So now I'm over applied by $30,000. What will we do? Well, here we're going to take, it doesn't show, but what we would do is we would debit our overhead account and credit cost of goods sold. So here, Tiger had actual manufacturing overhead cost of $1,210,000 and a predetermined overhead rate of $4 per machine hour. Tiger works 290,000 machine hours during the period. Tiger's manufacturing overhead is what? So what we would do is we would take the $4, I'm doing it on my calculator, times 290,000, and that gives me 1,160,000. So I can subtract then 1,210,000 from that, and that means that I'm $50,000 over applied. So let's see if I'm right. And I am. So here, under applied, of $50,000. We applied less than our actual costs of 1,210,000 here. So that gives us $50,000 under applied. And the way we would handle that is we would debit cost of goods sold for $50,000 and credit our overhead account for the $50,000. Okay. Now, any remaining balance in manufacturing overhead accounts, such as the $30,000 of over-applied overhead for pair companies, is disposed of in one of two ways. If it's immaterial, it's not that big an amount, we just close it to cost of goods sold, which I've been mentioning along the way. But if it's a big amount of unapplied overhead, then we're going to proportionally close it to work in process, finished goods, and cost of goods sold. In this course, I won't ask you to do that, other than just be aware that if it's a material amount of unapplied overhead, it's either over or under applied, and that is a material amount, more properly said, then we would do it the number 2 way. Hopefully that won't affect you in the real world. All right, so let's look at this. Here, the journal entry and T account, here's their cost of goods sold, and the manufacturing overhead account. You can see here the actual overhead costs were the debits, and the applied was the credits. So that gave me $30,000 over applied here, because my actual applied overhead was greater than my actual by 30,000. So we will then credit cost of goods sold and debit manufacturing overhead to correct that, so that this account here keeps a zero balance. All right. Now, calculating the allocation of under-applied or over-applied overhead between work in process, finished goods, and cost of goods sold. Here, let's assume the overhead applied at ending work in process inventory, ending finished goods inventory, and cost of goods sold is $68,000, $204,000, and $408,000 respectively. That's a total value in those ending inventories and cost of goods sold accounts of $680,000. So what we do is we calculate that percentage. Here's 68,000 as a percentage of 680,000, et cetera, et cetera. And now what we're going to do is take the $30,000 that we want to apply and take 10% of these of the $30,000 and 30% of the $30,000 and 60% of the $30,000 to get how much we're going to allocate to work in process, finished goods, and cost of goods sold. Okay, I think that's pretty clear. Hopefully you do too. Now that I've done that calculation, I've got to do the journal entry. And I'm going to debit manufacturing overhead to zero that account out and credit work in process inventory, finished goods inventory, and cost of goods sold. Okay, that's when you have a material amount of under or over applied overhead. All right, so in summary, there are two methods of disposing under and over applied overhead. One, we can just simply close it to cost of goods sold. But if it's a material amount, then we can allocate it to work in process, finished goods, and cost of goods sold. Now, of course, this number 2 is more accurate, but of course it's more complicated to do. And is it worth the trouble? If it's worth the trouble and it's a material amount of money, then yeah, we want to do it. Okay, what effect will the underapplied overhead have on net operating income? Okay, it's underapplied overhead. So what is the effect going to be on net operating income? Will net operating income be higher than it should be? Will it not impact net operating income? Or will net income be lower than it should be? Give you a chance to think about that. When we underapply overhead, that means we haven't put enough into the jobs. And when we sell it, that means our cost of goods sold are going to be understated. If they're understated, that means our gross profit is going to be overstated. Our net operating income will be overstated until it's corrected. Everybody see that? Okay, that looks like the end of chapter 3. And when we return, we'll take a look at more on chapter 3. We'll do the chapter 3 alpha slides. Until that time, bye for now.